Welcome to the MarketBeat podcast. I'm your host, Kate Stalter, and in this show, we cut through the noise and give you real market insights from professional investors, traders, asset managers, and analysts. Our guests put the market developments in context and give you actionable information to make you a more successful trader or investor. Let's get started. How do you handle a stock where there's a compelling story and some decent fundamentals, but the chart shows you that this stock is trading significantly below its previous highs? Well, there are actually plenty of stocks like that right now as the market continues either its downward trajectory or a bout of volatility. Stocks are doing both right now, and that depends on how you want to look at it. For example, one of the big tech winners to go public in 2021 was Upstart Holdings. Now, this company provides a cloud-based lending platform that helps ease transactions between lenders and borrowers. And the stock returned a whopping 1,850% between its December 2020 IPO and October of last year. Now, since then, shares have been in an absolute free fall. So does that mean the stock should never be on your watch list? Well, of course not. Now, Upstart has been on a growth trajectory when it comes to revenue and earnings. And although Wall Street experts expect earnings to remain steady this year, they do see a double-digit increase in 2023. So yes, this is one to watch, especially as it's in an industry that's being rapidly transformed by technology. I mean, think about it, right? Rather than getting all dressed up to go impress some bank loan officer down the street and you sit there sweating, you can just apply online from any number of lenders right from the comfort of your home. So that's a good story and some good fundamentals to back up a thesis that Upstart is worth watching. Now, in today's episode, we welcome back repeat guest and MarketBeat contributor Chris Markoch, who discusses 3 U.S. stocks that he's watching now, and all have compelling stories that could mean they're worthy of your watch list. Now, as we discuss, these stocks are not necessarily trading near their highs, and typically in my own trading and investing, I tend to watch stocks when the technicals indicate they may be approaching a buy point. But that doesn't mean you can't have a B list of stocks on a longer term watch list. And that's exactly the category for the stocks we discussed today. You'll get some great ideas today. Give a listen to this interview with MarketBeat's Chris Markoch. All right, so Chris, you are once again joining the show as a regular. Really appreciate having you here as always. Now, we're going to just jump right in, like we always do,
Sure.
And talk about a stock that had some news yesterday. One of the large cap U.S. stocks had some news, and just looking at the chart right now, this stock is trading at new highs. So tell us what it is and what you're seeing here.
So the stock that I'm referencing is Walmart. And I just wrote about this stock as one of my 3 stocks that I think will do well, no matter whatever you believe about inflation. And we can talk about that in a little bit. But the specific news as it relates to Walmart is there's 2 things that I really caught my attention about this stock right now. The first was the news that broke yesterday. They've hired John Rainey, the now former CFO of PayPal, away from them, and he's coming over to Walmart, which I think it's important because Walmart has been very deliberately moving into the digital transaction space. And it seems that bring over somebody like John Rainey, who unquestionably PayPal has grown under his watch, and now you're bringing him in, and there could be some synergy there, especially when you consider that one of PayPal's missions, I guess if you would call it that, was to service those that were the unbanked. And I suspect that that might dovetail fairly nicely into some of the consumer base at Walmart. And so I think there's some synergies there as far as what Rainey is going to bring to Walmart. Kind of an intriguing play there as far as why he would choose Walmart. And obviously, I think that's one of those that when you get that call, you take that call and you go from there, because apparently PayPal was not aware of his departure. This was a surprise to PayPal.
Okay, so let's talk about this, because it does seem clear that just given all the changes in shopping habits and so forth, that moving online into more digital transactions is something that any big company wants to do. Obviously, Walmart, as the biggest retailer, if you want to go back and forth with Amazon, I don't even know where that stands right now. I don't follow that because who cares? But, of course, they've had e-commerce operations in place for a long time. I do have to say it is more clunky than something like Amazon.
Yeah.
And I'm wondering if that sort of interface is something he's there to work on, or really the back end. Is it more of a marketing effort to get people to begin buying more online? What's your take on what might be behind this move?
I can't say I know specifically what he might be going there to do. Is it on the back end? Is it that the marketing aspect of it? I'm intrigued just by the fact that maybe there's going to be a synergy with PayPal itself, with Walmart, and just the ability for consumers to make their transactions a totally different way. By that, I'm not suggesting that Walmart is going to start delving into the crypto space or anything like that.
Right.
But I'm saying, I think there is that peer-to-peer transaction component of it that certainly, Rainey's bringing that over.
Well, one thing that I notice around here in Santa Fe, New Mexico, where you do have a lot of folks who come here from Mexico, and Walmart does allow people to send money home. They have a partnership with Western Union. So who knows if all of these different partnerships are going to go away at some point.
Right.
Now, I'm looking at the chart here, and I see that Walmart did clear a little area of consolidation about a week ago, and it's been just on a really strong upward trajectory recently, getting support along the 10-day moving average, which is a very short-term moving average and one that I look at. It bounced off of that and is just slightly below highs from last week. And in terms of the things that I tend to look at, Chris, in terms of the metrics, there's been some single-digit revenue growth, some very good double and single-digit earnings growth recently. And for a large established company like Walmart that is not anywhere in growth stock range, even though it has a pretty high PE ratio right now, it's not something that you would look at and expect blowout revenue growth whatsoever. So nothing surprising there. It's actually performing very well. And I'm looking at good earnings estimates for 23 and 24. So when you're evaluating this in terms of what investors might be looking at, what is your thought?
Well, there is another angle there that I like, and that is the healthcare angle, because Walmart's been making a push into healthcare. And one of the interesting things that tends to happen historically is that once investors feel confident that inflation has actually peaked, healthcare tends to be the sector that they move to. Right now, investors are still solidly in the energy sector, which makes complete sense. But once they decide that inflation may indeed have peaked, healthcare tends to be the area that they focus into. And Walmart's been making a push into becoming more established as a player in that arena.
In what way?
I've been seeing things about as far as just the pharmacy end of it and the pricing power that they bring to bear.
Yeah. So basically trying to perhaps build the pharmacy business away from some of the more traditional like Walgreens, CVS. Is that the kind of thing maybe?
Yes, they're trying to do that model of, they're calling it Walmart Health.
Okay.
And so actually they're trying to do things like primary and urgent care, all of those things in one facility.
Okay.
So this would be obviously apart from the Walmart supercenters that we know of.
Right.
But these would be actual different facilities that would take care of some of the primary and urgent care considerations.
Very interesting. Yeah, and that makes sense because in some of these more rural communities especially where Walmart is a very trusted name, that would make a lot of sense. Perhaps if people have to travel, right now they're traveling further for healthcare, this is something that would be right in their community. So I could see where that would make a lot of sense. Well, let's move on. You've got a couple other interesting names here. Also a couple of U.S.-based companies, which are interesting to talk about today. Okay, what you got?
Well, the first one, actually both of these that I want to talk about, but the first one is going to be Nucor. And these next two that we're going to talk about are, by some common fundamental metrics, these stocks are considered undervalued. And inflation is I wouldn't even say it's the elephant in the room. It's there right now. The CPI number came out this week. The PPI number came out this week. Both numbers came in hot. I don't have any insight as far as has inflation peaked, has it not? My guess is it hasn't yet, and that's more based on what the PPI said than what the CPI showed. But if I'm an investor right now, I'm looking for undervalued stocks.
Okay. And this is very interesting, Chris, because I pulled up the chart of Nucor. Looking at this, it is at new highs, literally at new highs today as we're speaking. And the PE ratio is 7. So what's going on here?
I think it lost some favor with investors because of I think there were assumptions there was going to be some disruption in the housing market and some disruption with the building because of inflation.
No, that hasn't happened.
But it hasn't happened. I think there was some concern about how the Russian invasion of Ukraine would affect it, but that never really made sense to me as an argument because I think all that's really doing is it's taking 2 of the major steel exporters offline.
Mm-hmm.
So that's a benefit for Nucor, and I don't see that going away anytime soon. Who knows when the war there is going to end. Hopefully, obviously, it ends quickly, but even when it does, it's going to take a while for the economic fallout to reverse itself. So I see Nucor as being in a really good position. Like you said, the PE is low.
Very low, yes. For a stock trading at new highs.
Right.
That's surprising to see. As a trader or investor, you need timely information to help you make better decisions, and analyst upgrades and downgrades can give you the outlook for the stocks you're watching, coming from the big institutions who are behind 75 to 80% of market movements. For absolutely no cost, MarketBeat will send analyst recommendations right to your inbox daily. You will get a concise summary of analyst upgrades, downgrades, and new coverage, along with relevant news and information for the stocks on your watch list, real-time portfolio monitoring tools, a rundown of the top headlines each day, market calendars, the MarketBeat mobile app, and other research tools. Don't miss out on this. Sign up right now. It's 100% free. You'll find this at marketbeat.com/ratings/newsletter. That's marketbeat.com/ratings/newsletter, and that link will be in the show notes. It's interesting because I did another interview recently for the MarketBeat podcast, and it will have aired a couple days ago at the time that this one airs, with a gentleman named David Auerbach, who runs an ETF focusing on REITs and housing. And he made the same point that you just alluded to, Chris, which was the fact that this housing boom, this need for new construction, it's not going away. Now, maybe the commercial construction industry is different, but the housing industry has not changed, and he predicted it is going to remain strong for the foreseeable future, maybe the next decade or so. So that would seem to bode well, wouldn't it?
It would, especially when you look at long-term growth, like revenue and earnings for Nucor are projected to be down from where they are now.
I see that.
So I could make the argument and say, well, who cares that it's got the low PE ratio? It's not going to have the same growth that it's had over the last couple of years. But like you just said, that's assuming that there won't be growth in the new construction area, which I don't believe is going to be the case. And it also assumes that the steel production that the markets come to expect from Russia and Ukraine is going to come back online anytime soon, which we don't know. Anytime you're dealing with stuff like this, there's speculation in stocks.
Well, right, especially right now, because there's so many variables economically worldwide. Now, one thing, in just reviewing the description of Nucor, one of the biggest industries they sell into is the automotive industry. So I don't know. I'm just speculating here. Is the chip shortage going to affect automotive manufacturing, which may affect Nucor? Maybe that's another wild card that's thrown in there. But what is it about this stock then that you like? It's at new highs. You and I both see that the earnings estimates are for slower earnings growth, continuing profitability, but for slower earnings growth in the next 2 years. And of course, that may or may not be adjusted either way, either higher or lower as time goes on. But what is it, Chris, that you want the readers, or the listeners actually, and in your articles, the readers, to know about this stock and why they should be watching it?
Well, I think it's, there's a lot of people that probably do day trading or who are very active traders who, I'll admit, they probably don't agree with me on a lot of things. I tend to come at it from more of a conservative approach. I'm looking at it right now and saying, where can you make money right now? So I don't know if you're an investor right now. To me, Nucor is a steady Eddie. You put it in there, you have it, you are going to get some growth this year. And I think analysts are projecting it to go down from its current price. But recent, but analyst projections are, I think the most recent ones came in March. So they haven't had any recent ones come in.
And also, let me just say, the stock is at new highs right now. So, of course, it is going to pull back. So, and in fact, I would say, if this is one that the listeners want to watch, keep an eye on, you might want to wait for a little pullback to one of these shorter-term moving averages, just so you don't buy, and then, oops, 2 days later, the thing pulls back again.
Right.
So how do you feel about that?
Well, yeah, and I especially think that's a good idea because they've got earnings coming up here in about a week. So, right now, if you're not currently in the stock, this would probably be a good time to at least certainly wait to hear what they say the all-important guidance word comes out and what are they going to be guiding for the rest of the year. But to me, it's a stock that's clearly undervalued now by most metrics that investors would use. It pays it's not a great dividend, but it's certainly a reliable dividend. I think it's 49 years going on. So it's a stock that if you're looking for something to get into, help offset inflation, Nucor seems like a very logical pick there.
Yeah, and the current yield is 1.2%. You're right, it's good. Take it. So, and I agree with you about waiting through earnings. I would never suggest to anybody that they enter a stock a week before earnings. Wait and see what happens. Even if the thing bolts higher, it's better to chase it after earnings, in my opinion, than to be unhappy if the thing does tank. Because you're right, everybody's listening for the guidance right now. That is the big thing that we're seeing. Okay, let's move on. You've got another U.S. stock you want to tell us about. And when I think of this company, I think of its CEO and his TV shows. So,
yeah, the next stock I've got to talk about is Camping World. And again, this is another stock that if you're just looking purely from a fundamental standpoint, this stock looks undervalued right now. P/E ratio around 4.5.
Wow, yeah.
Earnings, they're doing well. And what I've noticed about this stock that was impressive to me is they've been beating 2020 numbers.
Which were great.
Right. And 2020 numbers were outstanding because, again, you're dealing with the pandemic and, people obviously camping and assorted activities surrounding camping became very popular. But the RV industry, there's still a backlog of orders. So that was an industry in general that needed a shot in the arm, and it certainly got it. And production is still, like I said, there's still backlogs. So that's a catalyst for this company. And they're around their 52-week low at this point. And this is one that's the opposite of Nucor because here the analysts are guiding much higher, much closer to the 52-week high. And so here's one where I have to tip my hat here to Thomas Hughes because he wrote an article for MarketBeat about, maybe 6 or 7 weeks ago. And he was commenting on the fact that you had the low PE ratio, you have a dividend yield. At that time, it was 8%. Now it's even higher than that. And he was saying about how that was a deal that wasn't going to last very long. Well, here you got 6 weeks. The deal is still in place there. So, investors that are looking for that, this seems like one that if you wanted to get into it, now would be a great time to do it. However, again, the same caveat we had with Nucor, earnings are coming up not next week, but I think the beginning of May on this one. So again, you may want to hold off there until that earnings date and you hear the guidance, but it's one that looks very solid. Lots of institutional ownership on this one as well. In fact, about almost over 2-to-1 in terms of buying and selling in the last 12 months.
Now, one thing about this one, just as a little caveat here, and these things are not forever. This is just the situation at this time. This stock is trading below its 10-day, 21-day, 50-day, and 200-day. You've got sort of a moving average inversion here. I'm thinking yield curve inversion, but you've got the 200-day, which is not, forget that. But you do have the 200-day above the 50-day and then the 21-day above the 10-day rather. That is not what you want to see. So, but yes, as a stock is correcting, you will see some of that.
No, I just pulled up the stock chart myself, yeah.
Yeah, you will see some of that as a stock is correcting. But I agree with you. You want to wait to see what happens with earnings. You want to wait to see if that begins an upward trajectory. Sometimes you can get in early if you can draw a nice little trend line that kind of shows where the stock may be headed, and that can offer you an early entry point. But it sounds like you're agreeing too. Like, put this one on a watch list right now. This is not one to jump in on.
Right. And again, I'll go back to the same comment I made with Nucor. I think there's a lot of people who are more active traders and day traders who probably look more at technical signals for when to enter and exit a trade. I always tend to be more of a big picture. Where is this thing? Is there a narrative that gets this thing moving higher? Because you're right. If I look at the chart, I can say, well, if I look at the RSI, it's suggesting that we're getting pretty close to oversold, but that doesn't necessarily show up when you look at the simple moving averages either.
Exactly. Right. And sometimes I take those oversold and overbought indicators with a grain of salt. They're not as reliable as people tend to think they are if they're trading, in my experience.
Mm-hmm.
Okay, so that's a nice one. I really appreciate this, and we're kind of looking at something here that is a watch list stock, not something to buy right now, but could certainly have some potential going forward. Hey, Chris, you gave us, as always, some great ideas, some great food for thought. How do the listeners find you?
Sure, they can find me on Twitter. That's at CTM Copywriter, and they can find me on LinkedIn as well.
All right. Thanks again, Chris. As usual, looking forward to having you back on the show again soon.
Thank you, Kate. I look forward to it.
All right, that's a wrap on this week's episode. Thank you so much for listening. Don't forget to subscribe so you don't miss a single episode. You'll find the show on all your favorite podcast apps, Spotify, Stitcher, Google, Apple Podcasts, of course, anywhere else you get your podcasts. And you can always find us on MarketBeat.com. And please, if you're enjoying the timely market insights we're bringing you each week and finding them valuable, please give the show a 5-star rating on Apple Podcasts. That will help others find the show so we can bring these investing ideas to an even wider audience.